Hello everyone, I'm Ankit and you're watching StudyIQ IAS English channel. Now our today's discussion is centered around gold. And why are we discussing gold actually? Because in recent times, particularly last week, the prices of gold has actually increased a lot. Now in our today's discussion, I will cover the reasons why actually the prices of gold is increasing and also whether you should invest in gold right now or not. Let's start our today's discussion by understanding the context of our today's discussion. Now, why are we discussing this particular topic is because gold prices in recent times have actually surged above the levels of rupees 1 lakh per 10 gram of gold. Now, to put things in perspective, the value of gold has increased nearly in last 1 year from March 2024. For example, if you've invested 100 rupees in gold last year, now your investment would have become 159 rupees, which is a profit of 59% in 1 year. Compared to other investment options, this is a huge profit. Now, why is actually prices of gold has increased so much in the last 1 year? This is driven primarily by one factor, not just one factor, but primarily by one factor. This is when US President Donald Trump has actually threatened the chairperson of the US Federal Reserve to remove him from office, and this has actually sent a bad signal to the investors who have invested in US market. So naturally, they've taken the investment out from US market and they've started to invest more in gold. So this is one of the factors. What are other factors? Let us try to find this one out. Now, first factor, let us understand that factor in detail. That is renewed uncertainty regarding the US monetary policy. Now, you understand a country's monetary policy, take for example India, it has been done by the Central Bank of India, that is RBI, through its Monetary Policy Committee. Now, in general, what the monetary policy of a country should be like, it is the sole prerogative of the central bank of the country, which is indirectly a government-owned entity. But when it comes to deciding what the monetary policy should be like, the government normally does not extend any direction to the central bank. So, monetary policy involves 6 members, 3 of which are the nominees of RBI, including the RBI governor, and 3 other nominees are nominees of the central government. But when it comes to deciding on monetary policy, these central government appointed members also, they don't take directions from the central government. Rather, based on their own economic expertise and assumption, they make decisions of whether or not to increase or reduce the money supply in the economy. So, in essential, you have to understand that the independence of the central bank is important in this regard. Now let's come to the US Federal Reserve, which is the central bank of US. Now, the US Federal Reserve has issued a warning, that is the tariff policy of the US President Trump has actually threatened its mandate of maintaining the stable prices in the US economy. Now, to make things simple, let me tell you very briefly what is a tariff policy. Whenever you impose increased custom duty on any imports that are coming into your economy, that means you have increased the tariff. Now, when you increase the tariff, it also invariably makes any product more expensive in the US market. And what happens in that case? The prices that the commodities are available in that economy where you have imposed the tariff, it increases, and naturally this pushes the inflation levels up. Understand? So this tariff policy of the United States government, particularly of US President Trump, has threatened of increase in inflation in the US economy. And when a central bank would want to keep the inflation levels low, it has to reduce the money supply. And how does money supply gets reduced? You have to increase the interest rate. Now, one of the consequences of the increase in interest rate is that you will be able to control the inflation. But when it comes to increasing in interest rate, it will also push your economic growth down. And this is what the US government doesn't want. And that is why US President Donald Trump has intensified his attack on Federal Reserve Chief Jerome Powell, saying that when you are increasing the interest rate to control inflation, this will actually put US economy into slowdown and even into recession. So what US President wants, that they should increase the money supply, and by doing so, they should decrease the interest rate. So this is the two opposite things that the US Federal Reserve wants, and the opposite what the US government and particularly US President want. And this criticism of US President of US Federal Reserve has actually shaken the investors' confidence, that the investors are feeling that now once Trump has issued the threats, it actually compromises the independence of Central Bank of United States, that is US Federal Reserve. So when the confidence on any economy is shaken, when the confidence on any institution is shaken, which means that the investors will take out their investments from US economy and invest it elsewhere, and that is why the demand for US dollars has reduced. And when the demand of any commodity reduce, you understand, its value also reduces. Understand? So this is the reason why, because of reduction in confidence on the integrity of US Federal Reserve, has actually pushed the value of dollars down. Now suppose if you were an investor in the US market, naturally you'd want to pull out your investment from US market, but where would you start investing it? Naturally the avenue for it is gold, because gold is a very important commodity globally. It has been in demand since time immemorial, and it is also a very stable commodity. So that is why investors, they have retreated from US market, they have sold their holdings in US dollar, they have sold their holdings in US government securities, and naturally they have invested this money into a more stable commodity, that is gold, and that is why the value of gold has increased in recent times. Another factor of pushing the values gold up is the escalation of geopolitical risk. Now, world or globally, it faced two important geopolitical risks after COVID-19 pandemic. This was Russia-Ukraine war and the conflict between Israel and Hamas. Now, both of these conflicts have not ended currently, despite various efforts by US government and other stakeholders. Similarly, this is expected that going forward, Russia and Ukraine conflict is not going to be resolved anytime soon. And this has actually heightened tension in the global economy. And whenever there is an increased tension in the global economy, whenever there is a conflict that is going around here, you can understand the prices of important commodities like crude oil will increase, prices of important commodity like wheat will increase. So therefore it can push the levels of inflation up in the global economy, and whenever the prices of any commodity increase in the global economy, pushing the inflation up, naturally it will mean that the global economic growth might suffer. So why would any investor want to invest in government securities? Why would any investor want to invest in stock markets? Because if the economic growth will slow down, naturally the stock markets will also go down. So that is why they put all their investments in a more stable commodity and a more desirable commodity, that becomes gold. Similarly, due to many factors, we have seen that the global central bank demand of gold has also increased, because you understand, central banks across the world, they keep what is known as forex reserve, and in these forex reserves, countries also keep foreign currency like US dollar, like pound, like yen, like say euro, and in addition to that, they also keep significant investments in important government securities of many countries. Most important government securities across the world has been the US government security, right? So there is a huge central bank demand away from these foreign currencies and into stable commodities like gold, because forex reserve also contains a substantial amount of gold for every country. Now, due to many factors, the investors' confidence and the confidence of central bank also in the US dollar and US government securities has reduced, and the factor that has driven that is the US imposition of sanctions on the Russia after Russia-Ukraine war. Now, what happened that to penalize Russia for its war in Ukraine, US imposed economic sanction on Russia, which meant that Russian companies or Russian government who also held certain amounts of US dollar and US government securities, they can't sell them in the US market. So that actually signaled to the other central banks of countries like India, countries like China, that you can't rely completely on US dollar in government securities, because in future, what if US threatens you with economic sanctions? So you won't also be able to use such kind of dollars and government securities of US government. So naturally, the central banks, they are trying to hedge their bets. They are moving away from holding foreign currency assets like dollars and government securities into a more stable commodity like gold, which is also a part of the forex reserve. Right. So that is why this is driving a huge demand from the global central banks, which includes India, which includes China. And also China is a huge holder of US government securities. And when China is selling this US government securities, this has also pushed the value of US government securities down. And also now China is increasing its buy of gold. Therefore, the value of gold is also increasing. Understand? So these are the reasons why there is an increased demand of gold and reduction in demand of US dollar and US government securities. The moot point of the discussion is whenever there is a global crisis that is happening, be it less economic growth, be it global wars, be it increase in inflation, naturally the tendency of all the investors is to move towards gold because it is a desirable commodity. It is a very liquid commodity. You can sell gold anytime because people want to buy gold. Because gold is a more stable option right now, that is why people are increasing their investment in gold. I hope I've made this very clear. Now, why is gold so important for India? In India's perspective, you have to understand globally, India is world's second largest gold market. This is after China. India's gold demand in 2024 was about 802.8 tons, which is an increase of 31% as compared to last year. That was 761 tons. Okay, now China's demand, to put things in perspective, which is the world's largest gold market, it is 985 tons. Now gold, it places a very significant position in India's economy, and not just India economy but also in India's culture, because whatever golds that your households have right now, it's not just the gold that they've bought themselves. Rather, the gold that is in possession of the households in India, it has been accumulated from generations. For example, your grandmother might be having some of her gold jewelry, but before she passed away, she might have passed these gold jewelry to her daughter-in-law, and that is how Indian households have huge amount of gold jewelry with them. Now, gold actually also signals a very important commodity, that during the crisis situation, you understand the value of gold increases. And whenever there is a global economic slowdown, it means that people's disposable income will reduce. So naturally, whenever there is a reduction in disposable income, how would you have money to spend in your daily day-to-day expenses, right? But on the other hand, whenever there is an increase on global economic uncertainty, whenever there is an increased economic slowdown, the value of gold and the demand for gold increases. So whatever people are having in their houses in form of gold jewelry, in form of gold investment, their value might be pushing up. So in cases of reduced disposable income, and households, whenever they have certain exigency regarding their spending requirements, they usually pledge this gold into a financial institution, and in return financial institutions provide them with money. This is called as gold loan. And in recent times we have also discussed the demand for gold loans have increased, and also the NPAs in this particular loans have also increased. And why has demand for gold increased? Because Indian economy in recent times have witnessed slowdown, and naturally this has impacted the disposable incomes of household. So whenever they have emergent money requirements, for example for their health related expenditure, for educated related expenditure, or for that matter any social obligation like marriages, etc., and they need money, what options do they have? That they can pledge this gold into a financial institution and take money in form of loans. So that is why gold is perceived as a stable asset, and therefore it has prompted individuals to pledge their gold holdings like jewelry and get loans in return. And that is why people invest so much in gold, because in emerging situations, in conflict and in global slowdown situations, gold is a very good option. Now the big question is, right now, should you invest your money in gold? You have to understand few things before doing that. First is the price of any commodity. For example, the price of any commodity is driven by two factors, that is demand and supply. Right? Now gold is a commodity which is in finite supply. You can't grow gold, or you can't produce gold out of thin air. You have to mine that gold, and the reserves of gold globally is limited. So this supply factor is something which does not change frequently, and this is not a very big consideration when it comes to driving the factors of gold in day-to-day circumstances, because you understand gold is so desirable because it is in finite supply. So the biggest factor that drives the demand or the prices of gold is the demand of gold. And as I have told you, because of global climate, the demand of gold has increased, this has increased the prices of the gold. But what if going forward there is a good economic climate in the world? What if the US economy solves its political conflict between the US government and US Federal Reserve? What if US economy starts to grow better? What if the conflicts like Russia-Ukraine conflict, like Israel-Hamas conflict, that subsides? So in that case, the investors who have right now invested in gold, they would want to invest elsewhere. They'd want to invest in stock markets. They'd want to invest in government securities. So in coming future, there might also be a case that demand for gold might reduce. And naturally, this will also put a downward pressure on the gold. So you have to understand what is driving the prices of gold right now, and this driver can actually change in future. So this brings me to the next question, whether you should invest in gold right now or not. For example, there are two types of investment. One is a short-term investment that you invest for few days or a month, and one is a long-term investment where you invest for say 10 or 20 years, right? Now, right now, you understand the prices of gold is quite high. Even it has cooled down a little bit, but still it is quite high because it has increased, as we have understood, about 59% in last 1 year. Now, whenever price of any commodity increases such a huge amount, the investors who have holding gold currently, they will want to make profit out of it, right? So they will start selling their gold in the market, and whenever they start selling the gold which they have to make profits, naturally the demand of gold will reduce. So investors who are looking to invest in short term in gold right now, investing in gold right now is not a good option, especially for short term. But this changes entirely for long term. Why? Because suppose in the last 10 years, you will naturally understand the prices of gold has increased manifold. And if you consider next 10 to 20 years, it is also expected that from right now in the next 10 years, the gold prices will increase irrespective of the fact whether it decreases or increases tomorrow or today, right? So for long-term perspective, like for 10 years, for 20 years, gold is a very good investment option. So what the experts have recommended, that suppose you have a money, say 1 lakh rupees to invest in gold, you do not invest entirely or in a lump sum basis on gold right now. What rather you do, you need to make smaller investments like your SIP plans, like your ETFs. And what you need to do is you need to make smaller investments in gold so that going forward in 10 to 20 years, your value or your investment in gold increases. Understood? So it is a desirable commodity when you have to invest in long term, but when it comes to short term investment in gold, right now it is not recommended. And what you have to remember, even if you are investing for long term, do not make lump sum investment. What you need to make is smaller investments of 500,000 rupees SIP every month, or invest in ETFs, which also tries to hedge your risk. But you have to invest in smaller amounts. Please remember that. So this is all from our today's discussion. This is the practice question that I've curated for you. This is exactly on the patterns of UPSC. Please solve this question, recommend and tell me the correct answer in the comment section. And also, if you haven't already, please subscribe to our YouTube channel for more informative videos on ongoing contemporary developments. So this is all from my side for today. I will take your leave, and please have a very good night.